Okie dokie. Good day, everybody. This is James of MarketsAware, bringing you your daily insight on the 1st of August 2016 with love and care, as always, from MarketsAware. Today, we're looking at the week ahead. It's a big week, and whoever said that August was boring. So, the week ahead, let's have a look, see what we have on the calendar. And it's a pretty busy week, so bear with me. Starting off with, on the 1st of August at 2 p.m. GMT, we have the US ISM Manufacturing PMI. Expectation is it to come in slightly lower than previous at 53%. Previously, it was 53.2%. This is indeed of high importance, so keep a very close eye on the dollar versus the majors, of course, gold, and the dollar index. See how the dollar does with that. Then for the early morning Asian traders on the 2nd of August at 4:30 a.m. GMT, we have the Australian Royal Bank of Australia base rate decision. Now, expectations is that the RBA will actually reduce interest rates down to 1.5% from the current rate of 1.75%. This is indeed of high importance, especially if you're an Aussie dollar trader and a Kiwi trader. So we could expect maybe a bit of action in the Asian session on the 2nd of August. Then on the 3rd of August, it's the build up for the big one, which starts off with the ADP employment change. This is on the 3rd of August at 12:15 p.m. GMT. Remember, guys and ladies, of course, this is often seen as an early warning indicator, early warning sort of hint at what the potential non-farm payroll number could be. Now, expectation is for it to come in at 168,000, down previously from 172. Though this is like an early indicator, this actually usually has a medium impact on the market, but still keep a close eye on the dollar versus the majors and gold, of course. Then on the 4th of August, it's the Bank of England base rate decision. This is at 11 a.m. GMT. Expectation is for them to reduce interest rates at 0.25%, so 0.25%, down from 0.50% previously. This is indeed of high importance, especially for the cable traders, Euro Sterling and the FTSE. God, it only seems like a little while ago the Bank of England were talking about raising rates. Now, of course, since the BRIC exit, they talk about them actually reducing interest rates. So this is again something a key indicator we need to keep a close eye on. So this is the 4th of August. Also on that day, about 11:30 a.m., it's the time for Carnage Carney to speak, and we know what Carnage Carney does when he speaks. He can cause a lot of volatility in the market. Hence his name, of course, being Carnage. So keep a very close eye on him and obviously what he has to say. Cable traders, Euro Sterling and FTSE are some of the instruments to watch. Then on the 5th of August at 12:30 p.m. GMT, like I say, it's the non-farm payroll. Yes, we'll have the non-farm payroll. Expectation is for it to come in lower than previously at 175,000, down from 257,000 previously. This is indeed of high importance, so really need to keep an eye on the dollar against the majors and gold. At the same time, of course, we have the US unemployment rate, pretty much supposed to be exactly where it was previously at 4.9%, but still, this isn't of high importance, so we need to keep a close eye on the dollar versus the majors and indeed gold. So indeed, a big week ahead of us. So let's have a quick little chat about the Bank of England. Like another month, another central bank takes the center stage. Obviously, the Bank of Japan and the Fed saw us out in July, closed July out. Now it's the time of Bank of England to open us up in August. So like I say, the expectation is the Bank of England actually to cut interest rates, having time now to analyse the effects of the BRIC exit vote back in June. Carnage Carney, like I said, would also be speaking, so we'll expect to see what he has to say about future growth, the UK stability, etc. There is also rumours that there might be further asset purchases by the Bank of England to inject some life into the now failing UK economy. So we need to keep an eye on that, see if indeed that doesn't indeed happen. And like I say, not to be outdone, of course, the US has the non-farm payroll, which, as I already mentioned, is supposed to show moderate growth due to the BRIC exit. Of course, they're blaming the Brits. Screw you, Brits! So, let's have a current look at as the market stands, starting with the FTSE 100. FTSE 100, as you can see, is in a very, very, very tight range. Not an awful lot of movement. The Bollinger is showing a potential first support. This is, of course, a daily chart at 6.668.82. Second support at 6.5 to 0.11. And the Bolly is also showing a potential resistance at 6.817.53. Expect it might be probably carry on in a tight range. But really, like I say, it depends on what happens with the Bank of England base rate decision, etc. Moving on, we're going to have a quick look at the cable. The cable still remains under pressure following the brick exit result. Like I say, still a huge drop. We're still actually under the standard moving average of 1.37832, indicating obviously a downward trend. The Bollinger is showing a potential support at 1.31295, followed by a second potential support at 1.28773. So we really need to keep an eye and see what actually happens with the Bank of England. Now, of course, if they do cut rates, you could actually see it could actually go two ways. If they do cut rates, the market could potentially see it as a positive thing, actually seeing them actually being proactive, and we could see actually the sterling actually the cable actually grow in strength, because there is a potential Bolly result at 1.33816 here, as we can see here. However, the market could see it as usually, if you lower interest rates, as a negative thing. So we can really see that actually the support 1.28773. So really, to be fair, we have to see really what they do and how the market reads and looks into it. So it's all to play for on the big Bank of England base rate decision there. Moving on to the S&P 500. Pretty much like the FTSE, like I say, it's again a very, very tight range at the moment. Not a lot of action in the market. Really, it's really going to be looking at what's going to be happening in the NFP, etc. The Bolly is showing a potential resistance at 2.206. This is a daily chart again, of course, and a potential support at 2.15303. Interesting enough, today we have 11 companies. The S&P will announce earnings today, so let's keep an eye on what they actually say. It's only 11 companies, but still we'll have to see what the results bring in. But really, we'll have to keep an eye NFP on focus and see what the NFP brings us. Moving on to gold, the safe haven, of course. Gold on the daily actually carries on its recovery after last week's FOMC, easy for me to say, of course, remains above the daily standard moving average of $1,297.64, so still indicating a key uptrend here. Bolly showing a potential resistance at $1,372.06. First potential support, according to Bolly on the daily, is $1,340.6 as well, followed by a second potential support at $1,308.06. Of course, obviously, the Bank of England and NFP remain the focus for short-term movements on this, so we need to keep an eye how this week plays out. Interesting enough, though, keeping with gold, they were actually approaching a very important monthly level. This is a monthly chart. If we have a quick look, actually the potential Bolly resistance on the monthly is $1,370.78. Now, why I'm saying this is interesting, because this level has not been tested since July 2013, as you can see here. So it's actually a really key resistance. It's also a key Fibonacci retracement level. So we need to really keep a very close eye on this level. Last time we've got close to this, it has actually collapsed several times. So really, the NFP, Bank of England, let's have a look. See, we can actually break this level and actually go as high, actually break beyond it, and achieve the higher level since July 2013. So this is a very, very important level to keep an eye on. And as I always say, that is a wrap for now. Remember, this is no way to be taken as advice whatsoever. It's purely for informative purposes only. Special thanks again to Ned Dania. I'm James from MarketsAware. You trade safe.